Ever been in a situation where you needed a little extra cash before payday? Maybe an unexpected bill popped up, or you just ran short on groceries. We've all been there, right? It's stressful, and in the past, your options were limited. Payday loans, which come with sky-high interest rates, or asking friends or family, which can be awkward. But now, there are services like Payactiv that offer early access to your earned wages. It sounds great in theory, but a question I get asked all the time is, does using Payactiv affect my credit score? That's exactly what we're diving into today. Before we get into the specifics of Payactiv and credit scores, let's quickly recap how credit scores work. Your credit score is essentially a 3-digit number that represents your creditworthiness. Lenders use this score to assess the risk of lending you money. A higher score means you're seen as a more reliable borrower. Several factors influence your credit score, primarily managed by the 3 major credit bureaus, Equifax, Experian, and TransUnion. These factors include payment history. This is the most significant factor, showing whether you make your payments on time. Late payments can negatively impact your score. Amounts owed. Credit utilization. This looks at how much of your available credit you're using. High credit utilization can lower your score. Length of credit history. A longer credit history generally leads to a better score, as it provides more data for lenders to assess. New credit. Opening multiple new credit accounts in a short period can temporarily lower your score. Credit mix. Having a mix of different credit types, like credit cards, installment loans, and mortgages, can positively influence your score. Now that we've refreshed our understanding of credit scores, let's talk about Payactiv. Payactiv is an Earned Wage Access (EWA) service. This means it allows you to access a portion of the wages you've already earned before your official payday. It's not a loan. It's access to money you've already worked for. Here's how it typically works. Your employer partners with Payactiv and integrates it with their payroll system. As you work, your earnings are tracked within the Payactiv system. Then, when you need access to funds, you can request a portion of your earned wages through the Payactiv app or website. The funds are then typically transferred to your bank account, a prepaid card, or, even in some cases, available as cash pickup. On your regular payday, the amount you access through Payactiv is deducted from your paycheck. So, the key question, does using Payactiv affect your credit score? The short answer is generally no. Here's why. It's not a loan. Payactiv is not extending credit. You're accessing money you've already earned. Because it's not a loan, it's not reported to the credit bureaus. This is the crucial difference between EWA services like Payactiv and payday loans. Payday loans are reported to credit bureaus and can negatively impact your score if not repaid on time. No credit check. Payactiv doesn't perform a credit check when you sign up or when you access your earned wages. This is another significant difference from traditional lending. Credit checks, especially hard inquiries, can slightly lower your credit score. Since Payactiv doesn't do this, it has no impact on this aspect of your credit. No debt accumulation. With Payactiv, you're not accumulating debt. You're simply receiving your already earned wages early. This means there's no debt to report to credit bureaus, and therefore, no impact on your credit utilization ratio or overall debt levels. However, there are a few important nuances to be aware of. Employer integration. Payactiv's functionality relies on your employer partnering with them and integrating their systems. If your employer doesn't offer Payactiv, you can't use it. This isn't related to your credit score, but it's a critical point to consider. Fees. While Payactiv isn't a loan, it may charge fees for certain transactions or access options. These fees vary depending on the specific services you use and your employer's agreement with Payactiv. It's essential to understand these fees to avoid any surprises. These fees, however, have no bearing on your credit score. Potential overdrafts. Indirect impact. While using Payactiv itself doesn't directly affect your credit score, if you use it irresponsibly, it could indirectly lead to issues that affect your credit. For example, if you access too much of your earned wages and then don't have enough left to cover other bills, you might overdraft your bank account. Overdrafts can sometimes be reported to credit bureaus or check verification services, which could have a negative impact. This is not a direct effect of Payactiv, but a consequence of poor financial management. So, to reiterate, using Payactiv in itself will not affect your credit score because it's not a loan, doesn't involve credit checks, and doesn't create debt. It's simply a way to access your already earned wages earlier. It's also important to differentiate Payactiv from other types of financial products. For instance, some companies offer payday advances that are actually short-term loans. These loans often come with high interest rates and can negatively impact your credit score if not repaid on time. It's crucial to understand the difference between these types of products and EWA services like Payactiv. In summary, if you're considering using Payactiv, you can generally do so without worrying about it directly affecting your credit score. It's a useful tool for managing cash flow and accessing your earnings when you need them. However, as with any financial tool, it's essential to use it responsibly and understand any associated fees. Make sure to budget carefully and avoid overspending to prevent any indirect negative consequences like overdrafts. With that said, thanks for watching, and until next time.